there could be 500 new listings. If none of them are what you want, what's the point of a hot market?
Absolutely. Is there even people that do say, skip the dishes or something on the side? There's like the whole gig economy now, and these lenders are geared towards helping people qualify for more when the bank says no.
Therefore, we have less listing.
Yeah.
The price pressure goes up, and so the prices go up.
Vicious
and
circle.
It gets further and further away.
We're going to see a few interest rate hikes, probably 0.25% in the next maybe a month or two, is what people are saying now.
A lot of people are wondering about mortgages as things are getting tighter. What are their options? Hello, happy 2022. This is Alex Yao with Remax Select Properties.
And Chris Cornborough from 4Front Mortgages.
And this is your first market update for 2022. Last year, we've seen a lot of growth, obviously, as everyone knows, especially the single detached market, townhouse market, and a lot of people moving out. Condos have been pretty stagnant. I think December, that kind of changed a little bit, started to shift a little bit in December. Obviously, another busy month in December, but we have these standard stats here with everything going up slightly, which is normal. But what I wanted to talk about was condos and townhomes in west side and the east side of Vancouver. So what's interesting in December was, as you know, supply goes down every Christmas time or so. Everyone's preparing for Christmas.
Nobody wants to do an open house on Christmas morning.
Well, it's not really us. It's
I get it.
But anyways, so Vancouver West Side, single detached, there were 455 homes for sale, 79 sold in December, okay? Same area, Vancouver West Side, condos and townhomes, 463 for sale, 200 sold.
So that's like 800 listings and 300 sales?
But majority of them are the condos and townhomes, attached ones.
That are selling.
And Vancouver East Side, well, obviously Vancouver West Side is quite high price, right? So let's talk about Vancouver East Side. 290 homes for sale in December. These are single detached homes. 93 sold. Okay, not bad. About 30%, 33% around there. Vancouver East Side condos and townhomes, 274 homes for sale, 183 sold. That's over 50%.
Wow.
It's like 70, 60 something, 70%. So condos are picking up. I think, a lot of people were kind of dreading, seeing the house prices kind of pull away, and condos were hard to move up. I think that may be shifting right now.
I remember it's kind of cycling through where it was houses then would slow down, and then it was like townhomes, and it was the condos were like the hot thing, right?
It's always that delta, that difference, right? When houses go too far, condos look really attractive, right? And then obviously more people buy condos and the house goes up. It's always like an elastic. It's a constant elastic. And of course, with all the housing prices going up, a lot of new buyers who may not be first time, but maybe returning or newer buyers, they want to get in more.
Makes sense.
Just get into.
I wonder if a lot of people are going to cash out on houses, like say for example, retarees. Take advantage of maybe get into a townhouse or a condo. Bigger condo, like a nice luxury condo downtown, for example.
It's something that we always see when this elastic gets too tight. Right. A lot of people are thinking, I can sell my house for $3-4 million and get into a condo for a good value right now. And that's how things kind of start.
But you're right. I mean, where do you go? That's the problem. If everything's going up, you've done well, but then you're paying more for everything else is growing equally as expensive, right? So it's not like a obvious choice as to what to do.
Right.
And if it's just equity. If you can live in your place and afford it, maybe you stay. I don't know.
Absolutely. And then, but also a lot of sellers that I've spoken to, they want to move. They just can't find anything. So that holds them back from listing. Therefore, we have less listing. The price pressure goes up, and so the prices go up.
Vicious
and
circle.
It gets further and further away. So it's absolutely a vicious circle. But sometimes I have to remind them that at the end of the day, all you're looking for is one. That one could come out when there's 3 listings. That one could come out when there's 100 listings. You know, there could be 500 new listings. If none of them are what you want, what's the point of a hot market?
Absolutely.
Right? So on that note, a lot of them are also wondering, as people are moving up and getting into the market, a lot of people are wondering about mortgages as things are getting tighter. Regulations getting tighter, you have perhaps interest rates may go up a little bit more. What are their options?
Well, I think this year for sure, we're going to see a few interest rate hikes, probably 0.25% in the next maybe a month or two is what people are saying now. And certainly one in the fall, I would suspect. So you might see prime go from 2.45 to just under 3, 2.95. To qualify for a little bit more or to qualify for something, we have a lot of clients who are, for example, self-employed. So the rough math is that it's about 6 times your income is where you're going to get to in terms of qualifying with a bank. We deal with a lot of like credit unions, trust companies, kind of alternate lenders who will take into account, I would say, like the word non-traditional income. So they don't want to see your tax return. If you're a business owner, they want to see maybe your financial statements or, for example, say 6 to 12 months of bank statements, and they'll use that for your income. So typically, you know, if you're self-employed, you've got a great business, it's got good cash flow, we can qualify you for a lot more than what you could qualify for at a traditional bank lender. There are some nuances to it. The rates are a tad higher. There are some fees involved in setting it up, but the reality is it allows you to get into the market now versus having to either declare a bunch of money on your tax return and then pay income tax, because income tax also has gone up. You know, we're almost at a 50% marginal tax rate for anybody who's over 100 grand of income. So, you know, that is one market segment that's really growing, is the alternate lending space. It's a growing space. A lot of Canadians are self-employed or they have like a second job. Like, you know, we have a lot of clients who are, you know, commission-based, or they started businesses, or even people that do, say, skip the dishes or something on the side. There's like the whole gig economy now, and these lenders are geared towards helping people qualify for more when the bank says no, or that bank pre-approval is not enough. There's a lot of options out there. So we encourage people, just ask your mortgage broker for some options, because just because the bank says no doesn't mean you can't get into a property. There's a lot of options available right now in the market. And I think with regulations as they are, you know, unfortunately the government's targeting borrowers. They should make it easier for people to borrow money, but in a smart way. So for example, you know, if you're a first-time home buyer and you've only got 5% down, why is it only a 25-year amortization? Why not make it a 30 or 35 so people can afford a little bit more of a cash flow scenario? But I think what will happen is if the stress test moves, you know, you're alienating a segment of buyers who could otherwise afford to do it. Hence, the alternate lending solutions can kind of come into play here.
Okay.
Yeah.
So, in regards to let's say new buyers, most of them actually they go to their bank. That's their default thinking, right? So obviously, it may be easier to use an alternative lender.
Absolutely.
But the cost, what are they actually looking at? I mean,
so for example, right now on a 5-year mortgage from the bank, they're anywhere from 2.5% to 3%. An alternate lender for a 1 or 2 year term is going to be about the same. It's going to allow you to get into something, and they're short term because we're building a story here. We're trying to help you get from A to B to C, and if you can't even get to A, well, you certainly can't get to B or C.
Right.
These alternate lenders, it's a very short term, like 1-2 year solution where we can guide you and say, okay, you know, you got to build up your income a bit more. You've got to get equity into the property, and then at that point, after the term is up, we can take you back to like a normal bank solution where you're getting traditional rates.
Right.
So it's just a segue between where you kind of want to be.
Right.
Does that make sense? It's not a long-term solution.
Okay.
But for people who are hesitant and saying, you know, I just started my business last year, I don't have my taxes done yet, I don't have a 2-year average that the bank is going to want to see to qualify. These are where these solutions can come into play. They can help you get into the market. You can grow some equity. You can get your business built up to where it needs to go.
Right.
And then we take you back to the bank in a couple years.
Right.
Yeah.
And another question that tends to pop up, and kind of relating to the same subject, not so much lenders, but mortgage brokers. Okay. typically, like I said, a lot of clients or buyers or sellers, they tend to go straight to their own bank because they know us. We've been banking with them for 20 years. They know us. They'll give us the best rates. They'll do this and that. Great. But reality, what's the difference between a mortgage broker at a major bank versus you, for example? And I know that you used to be one of the top dogs in the major bank. And before you started this a few years ago.
Absolutely.
So what's the main difference?
The main difference is somebody who works for a bank can only sell the bank's product. So whether it be a mortgage or even like an RSP or a mutual fund, they typically only have access to that bank's product. So if the bank says no, or we can only get you so much, the bank doesn't have another option for you. It's too bad, sorry, we can't help you. And the reality is that it's hard to go to the bank nowadays, and there's a lot of turnover, they're short-staffed, everything takes a lot longer than it used to, and there's none of that handshake, like 20-year relationship, like find me somebody who has worked in the bank for 20 years that's still seeing customers. Like, it doesn't happen.
Right.
That doesn't happen anymore. It's not like our parents' generation where you'd put on a suit and go to see your banker on on a weekend, and hopefully they'd give you a handshake kind of approval. For us, we can shop all the banks. We work with most of them.
Right.
We can go directly. We have great partners at the banks that are fast. All they do is dedicate their time to underwriting mortgages, and if they say no, then we can just go down the list of people we can work with, and we'll find you somebody.
Right.
It's not like we're going to say no, we can't help you.
Right.
We can help everybody. Believe me.
Yeah.
Like if you have something that needs to be done, a mortgage broker will get it done for you.
Yeah.
It might be difficult. It could be a little challenging, but we'll come through. Yeah. That's where we earn our keep. If we don't find you a mortgage, we don't make any money either. We've spent a lot of time doing it, and it's rewarding when you can kind of help someone who's been turned down by a bank get into a home, and they build equity. Look at what's happened in the last couple of years. People have made 20, 30, 40, 50% by having somebody just take a different look at a problem and come up with a solution versus just being told no. Then what happens? It's just that relationship.
Cool. Thank you so much. And again, alternative lending might be the choice for you. For more details, of course, contact Chris at any time. And any real estate related questions, call me. Thank you so much.
Thanks, Alex. Chris. Yeah, thank you.